All right, good peoples. Here we are with the Roundhill weekly payers. So we've got the S&P 500, the Nasdaq 100, the Russell 200, which is continuing to outperform. We had kind of an interesting day yesterday where the Nasdaq and many other stocks were flat, but we had a big up day in the Dow. Now, the Dow's only 30 stocks, so if you get two or three big movers, that can make the Dow go up 2%. If you're up 5% or 8% in one or two or three of the 30 stocks. And typically, the Dow is international money flow. So I think with the Trump election, you have more international people look to America and they say, we want to own the biggest of the biggest. We want the Caterpillars. We want, the big guys. Now, there are some big guys in the NASDAQ, but the NASDAQ is so big that sure, international money will buy the big tech names, the big household tech names, but they don't venture as far. And I'm talking about big international institution money, which can move the market. So that's your difference of who the audience is for the Dow versus the NASDAQ and versus the Russell 2000. While the Russell 2000 is sensitive to interest rates, because you're typically talking about smaller cap companies who need to borrow money to grow. A lot of the big cap guys can float stock and their stock's so high already they can raise money. But it's harder when you're a smaller stock, so you're very dependent on rates. Now, it's interesting. The market is also telling us they don't want mortgage rates to go down, but you've got a Fed who wants to lower rates. So I think this next December rate will be very interesting. We're starting to see some signs that it may not happen. We got a long way to go. And by the way, again, I know I've made comments. Let me know what you guys want to hear from me. I've got a series of things I want to start doing besides these weekly payers, but I've been trading so much in my own account that I haven't been telling and talking about what to do. I'm just doing it. So as you know, I've moved away from the YieldMax funds as far as having income oriented. I don't think they're bad. I think there's a place in the market to own some income funds, but so many, I see wealthy people in some of these groups just, using margin and going nuts when I'm like, oh my gosh, you can make so much more money on the underlying. Now, I remember when I was a proponent of take YieldMax, and I was always fighting the people that said the underlying makes more money. So they go back and forth. But I have some videos coming out. I mean, I've been in MSTX. For those of you, it's a MicroStrategy 2X by Defiance. So I know I'm going to get into Roundhill in a second, but this is I don't call it a rant, but education. So just fast forward if you want the Roundhill stuff. But on MSTX, I got in it like Thursday of last week. So then on Friday was a big up day. On Monday, I was up 51.6% on my MSTX and then up a little bit on Tuesday. So, I mean, there's no way on earth that Misty can come out and pay $4 or $5. But what are you really getting? You're getting it on a $30 stock. I mean, it's a fantastic. The yield is fantastic. But when I can double my money in a week, that is my income. So if I put 40,000 out there and I double my money, that's 40,000. I guarantee you're not going to get 40,000 in Misty dividends without putting an awful lot of money in there. So that's my point. There are times when you see these opportunities because of the Trump election, it was signaling that you want to be in. I didn't even do it on Coinbase. I could. That's another big guy out there. So what you have to find when you're bullish, right? You want a 2x. but you don't want to set in that thing for 6 months because you think. So I think Bitcoin is very likely going to 100, probably minimum target of 100, and then maybe 125 before we see a significant pullback, right? But I do think that we could go back, for those of you that haven't been in it. I just got out, okay, on Tuesday. Now, it may go another $10 or $15 higher. I'm not talking MSTX price, I'm talking Bitcoin, but they correlate, right? If you take BTC and MSTR, which I use MSTX, which is a 2 times through option leverage when they're doing it, but they don't pay a dividend. So I ignore all that part, right? For those of you just chasing dividend, we can talk about some of the things. Tesla was another one, but when I look at Yieldmax, they always screw up Tesla. Tesla's like $15, maybe $16. I didn't even look. But I mean, it's nothing. If you've been in Tesla, you've made 60, 70% in 3 days. So I use most of my capital in MSTX that I wanted to risk out there. But you could be. Now, I congrats to any of you that are in the income funds because you're going to do well. But don't let it replace your entire portfolio. And I know people say to me, well, Bruce, you're doing your own options. But there's ways when I didn't do any options. I simply just went over and used the 2X fund because I was so bullish on BTC. I could have gone to the Pro Shares. They have a 2X. But I used a 2X on MSTR, which is really the same thing as, I know it's different, it's a company, but with Michael Saylor, it really is BTC. Their claim to fame is how much BTC they own. Bitcoin and how much they borrow money and leverage and sell stock and buy more Bitcoin. So, I mean, you could just do a Pro Shares. I forget which one it BITX or which one is the 2X. Okay, let me get into Roundhill, people. So I wanted to say that all up front. Write to me in comments what you want me to do. Yeah, I'm still bullish the metals. The metals are going to sell off for a little while now. It's Bitcoin's turn and some of the other stocks, but it is by no means going to go away. We're going to do just fine in the metals. I mean, the stocks in the metals have been beat up, but so what? I mean, gold was at 2,800. It's at 2,600. It might go to 2,500, but it'll also be 3,000, 3,500 in 2025. All right, guys. So let's jump in here. Let's take XDTE, right? Let me go to, yeah, my spreadsheet's easier to show you. All right. So these had decent payments with the S&P 500 being the weakest, the NASDAQ being better, and the Russell being the best. But look at this on all of them. They're all up because the markets are up. Now, the market slowed down on Tuesday, but since this reported last week. So we got 53.62. So it's up $1.82. I mean, that's almost 5%, right? Well, yeah, 10% would be $5.01, so 5% would be 260. So it's around 2.5% in a week. That's awesome. Now the yield is very average, 2105, right? That's an annualized yield of 217 over the week. But hey, 20%, if you took your money and you made all of your money. Now, I could see somebody putting 50% of their income into one of these funds. But again, we're also near highs. So over the next year, you could do very poorly if all you did was own S&P 500 and we went down 30, 40% from heights. Who knows, right? I still think we've got a pullback coming, right? Could be from 6,100, it could be from 67, but very likely 61, we could have already topped. Thanksgiving week will tell us if we move to new highs or we drop down below like 5,700. One of those two things is going to happen the week of Thanksgiving. All right, guys. So let's move to the NASDAQ. How do we do on that? So we paid 21 cents, a little bit more than last week, 21 yield. But because the price is higher, right, which is all part of your total return, I'll show you next, your yield dropped a little bit. So let's jump in here to QDT, the NASDAQ 100. Also up $1.68. So pretty comparable because it's lower price. If you took percentage, it probably is slightly higher than the S&P 500. So you see your yield, look at this, went from 26 cents to 31 cents. So you got paid more, your yield. So where I was going, sorry, I was starting to tell you guys before. If you take for those of you that aren't familiar, just look it up, the rule of 72. The rule of 72 exists for people who want to figure out how long does it take me to double my money earning an annualized interest rate, okay? So let's say I'm earning 12% on my money. How long will it take me to take 10,000 to be 20,000? Well, I divide 12, my percentage return, my annual percentage return, into 72. It's 6. So in 6 years, I double my money. At 37, that's 74. If you got this consistently in a year, which you won't, okay? I mean, you could have a year where you got 37% in the NASDAQ, no problem, but not over 10, 15 years. So you guys that are out there projecting you're going to retire, I mean, if you got a lot of wealth, you can, right? But realistically, 15, 20% annualized, Warren Buffett would love that, okay? You just can't expect it over a 20-year course. Just like I think the NASDAQ could correct 30 or 40%. But if you're a 5 and 10-year guy, go put your money if you want to in QDTE and leave it in there or 50% of it, and you're going to do just fine. You're probably going to average 12% a year, which in 6 years, you double your money. Okay? All right. So let's move to the last one, RDTE, which was the winner in both, right? It paid 30 cents, okay, but it was up 277, 43.10 to 45.87. The reasonable yield, right? 34%, so a little bit underneath the NASDAQ. But let's go look at all this here. And this is what matters, people. This is the end result. I always preach this. So again, you've got to plug in your own number, right? The only choice I had, well, I have multiple choices, but I just plugged in the inception date price, right? Which shows you a 251 day. That's how long you would have been in it if you bought it in inception. Doesn't matter what amount here. So on the S&P 500, your dividend return is 1539. Well, that's for 251 days. So what would it be for 365? It would be 22.37%. Okay. So what is my gain or loss on the underlying, right? This is NAV erosion, NAV gain, whatever you want to call it, but you need to add it in or subtract it to get your true return. In this case, we got a 3.2, right? We're now trading at 53.62, and if we bought it in inception, we bought it at 52.46. So 22.37 and 3 gives us 25.5% is our total return at 251 days of ownership. Okay. Now, those of you that like the NASDAQ 100, and it truly has paid, look at the difference, 22.17. Okay. That's just a straight 251 day dividend return. Well, when you annualize that number, you're 10% higher. But guess what? They're up 3% and you're down 8.6. So these are getting close, right? This used to be even higher, but the NASDAQ's hanging in there because as the market moves up, they're closer to the inception price. Your results may vary. Maybe you bought this at 41 and you're up here, right? This is clearly, this year so far, 251 days has been a higher paying fund. But it also on the NAV part has gone down. Now the Russell, again, I always go into this, 86 is not practical. Let's just look at the dividend return. Again, as the days go out there, the dividend return gets bigger, right? Because the sample size, this is 251 days of payments on the purchase price. Well, you have a purchase price of 42, but you only have 64 days, right? So you got 5 payments maybe in your base. Actually, we could go look at that. Yeah, you have 1, 2, 3, 4, 5, 6, 7, 8. So you've had 8 payments, okay, but the other guys have had like 40 payments, right? So it doesn't really compare. But look over here, just like your sample size in 64 days, your gain or loss. Look, you bought it at 42, it's 45.87 over 64 days. So when they annualize that, it says you're going to 52.55, which is not practical. You're not going to get that. So I would say that it's somewhere, if you really had this normalized, this would probably be about a 28% return. So it would probably be the biggest returner, but this is skewed because the sample size is too small. So this is where I calculate all these numbers to get the annualized numbers. And the XPay, people have asked about that. That's a fixed targeted at a 20% return, and they're focusing on paying you return of capital. Don't let that be a bad word. That can be a good word, because those of you that want to own this in a taxed, if you own these in a taxed account, now there is some ROC qualification. It may even be a 60/40, like a section 1256. You need to talk to Roundhill or your accountant about the tax. But on this guy, if they show it as ROC, you don't normally, you'd have just, it'd be ordinary income. But when you get all ROC, which is what this is targeting at, then you get in a taxable account. You don't have to pay any income tax on that. What happens is you calculate how much you got paid, and that ups your purchase price, right? And it makes you, let's say you sell it for 57, but you bought it at 53, all of a sudden you would have a bigger, but it would be in the capital gain category, and it's only settled when you actually sell the shares that you bought. All right, guys, that's what I got for you. It's Bruce with Targeted Wealth Creation. Let me know in comments what you want to see. I know I owe a lot more videos. I just been taking advantage of this regime change and all the impact that it has on the market, and just trading a lot more in my personal accounts. So that's why you haven't seen me do so many videos. All right, guys, I'm going to do Defiance now. Talk to you later. Bye for now. Again, this is not financial advice. I'm not a financial advisor. Bye for now.